going on, guys? Welcome back to the channel. My name is Mark and this is Entrepreneurial Finance. In today's video, what we're going to try to address is the bull and the bear case for Bitcoin and kind of what those look like. We're going to talk a little bit about the history of our monetary system and how it kind of evolved from the gold standard to the fiat system. And now we're going to talk a little bit about what cryptocurrencies are, what blockchain is, and ultimately at the end of the video, we're going to give you my final opinion on this financial asset. Okay, so I found this clip of Elon Musk talking about cryptocurrencies or Bitcoin specifically, and I kind of share a very similar view as him. So before we actually get into the video, I just want to roll this clip so that you guys can kind of see where I'm coming from when I'm talking about most of my opinions. Go ahead and roll the clip.
And you love code, but you don't seem to be as bullish on Bitcoin. Do you have any, could you break down like why? Because you're talking about this big database that's more secure for faster transactions. It seems like Bitcoin's hitting at least some of those.
I'm neither here nor there on Bitcoin. It's just like the things. Yeah. This always gets like the crypto people angry, but there are transactions that are not within the bounds of the law, and there are obviously many laws in different countries, and normally cash is used for these transactions. But in order for illegal transactions to occur, the cash must also be used for legal transactions. You need an illegal to legal bridge. That's where crypto comes in.
So is it kind of the dark net stuff?
It can't be entirely dark, because otherwise how do you buy normal stuff?
True. Yeah.
And cash these days is used just much rarer. It's hard. It's like increasingly difficult to use cash. Some places you can't use cash at all.
Yeah. True.
So there's a forcing function for transactions that are illegal, quasi-legal, and in some cases legal. But they've got to have some. It's got to be both legal and illegal. It doesn't count otherwise. Otherwise, you simply it can't just be transactions within an illegal economy. Because how do you buy food in a house or something? You must have a legal to illegal bridge. So where I see crypto as is effectively as a replacement for cash, but not as a replacement as a primary. I do not see crypto being the primary database.
Okay, so you can kind of see he is kind of on the fence with Bitcoin as well, which is why today I wanted to talk specifically about both cases for this currency and what it ultimately means for our economy and just kind of share my views on it. But I kind of feel the same way, I don't believe it will end up becoming the central repository for all financial related data, which is kind of what I think most early adopters are
predicting it might become.
So but before we get into that, let's just quickly talk about the history of currency, what the gold standard was, as well as how we evolved to the fiat system. Okay, so the gold standard was a monetary system actually based on the physical commodity of gold. There was three main functions of money back then, and we kind of looked at this to see what our main functions of money are today, and they pretty much remain the same. Or the main functions of money are it has to be a medium of exchange, so you can use it to exchange goods and services. The second thing is it needs to be a unit of account, which gives a numerical or dollar value to the goods which you're purchasing. And the third function of money is that it needs to be a store of value, meaning it is saved and retrieved reliably in a safe place. The gold standard kind of died off in the 1930s, and we adopted what was called the fiat system. And what the fiat system is essentially pegging every country's currency against one another and having it dynamically fluctuate based on the country's value. Okay, so a fiat system is based on a government's mandate. The paper currency it prints is a legal tender for making financial transactions, and it was basically no longer reliant on a physical commodity. So like I said, gold reserves started declining in the 1930s, and it was fully abolished in 1973, and fiat became the main source of currency, the main source of money, as well as those three functions that I just mentioned. So the fiat system basically led to the role of a central banker and how pivotal it became in our economy. Okay, so what we're seeing these days is we're seeing these insane stimulus packages, central central banks and infinite money, if you will. The money printer go burr. Basically, central banks are meant to be a lender of last resort, and they're supposed to provide liquidity as well as assurance to commercial banks when there's a shortage of supply of it, aka when people are defaulting on their mortgage or unable to pay their mortgage for the current month, they're deferring their business loans, anything along those lines. And whenever there's a tight squeeze, basically central bankers are meant to kind of step in and provide liquidity to commercial banks. That's not their only mandate. Central bankers are also mandated to provide price stability to a currency, and that basically results in inflation targets, whether deflationary or inflationary, for a given currency. And there's basically three main tools in monetary policy that central bankers can use. Fiscal policy is a whole nother thing that's more related to taxation. Monetary policy specifically, there's three main tools, and they are as follows. So open market operations, and this is where the central banks can basically buy securities. So for instance, if they want to push the interest rate down, what they'll do is actually purchase a bunch of treasury yields, okay? And if they want the opposite to happen, they'll actually sell a bunch of treasury bonds. Okay, so that's open market operations. Their second tool is the reserve requirement, and that's essentially the amount of liquidity a bank must hold overnight. It's called the overnight rate. And their third tool is the discount rate at which they charge short-term loans to commercial banks, okay? These main tools are meant to influence the money supply, and the money supply in turn influences inflation, okay? So what we're seeing now is we're seeing this increased supply, and what that's resulting in is lower interest rates, and it's putting cash into consumers' pockets. So as you can see, the stimulus packages going to people who are unemployed, or even in the States, I recall there was a bill going to people who are still employed but making under a certain amount. We're providing liquidity to consumers in hopes of stimulating spending. Now, ultimately, central banks and their role in the economy is pretty much influenced by government, and to me, that is the main difference between fiat currency and cryptocurrency. So cryptocurrency kind of encourages the C2C instead of B2C, and if you don't know what that means, it's consumer to consumer instead of business to consumer, and it's encouraging this peer-to-peer system where we kind of eliminate the local banks, if you will. Because if you think about it, local banks are under the jurisdiction of the government. In fact, in this book I just read, The Blockchain Revolution, it states that 44% of Bitcoin users are actually in favor of eliminating the state. So to me, this whole cryptocurrency fad is a little bit more of a philosophy about decentralizing power from public authority rather than a whole new system in itself. It's simply another currency which you have the option to buy into that is decentralized from public authority. Okay, so I hope that helps you guys kind of understand the brief history of money and what the fiat system is. It's basically, your currency dynamically revolving against other countries' currencies, and then you have Bitcoin or Ethereum and all these other cryptocurrencies, which are basically peer-to-peer.
And it's decentralized from the government.
Now we're going to talk about the bull and bear cases for this financial asset, and ultimately at the end, I will give you my final opinion on whether I think you should buy or allocate a small percentage of your portfolio to Bitcoin. Okay, so stay tuned. Okay, so now that you have a good understanding of the history of money and their three main functions of money, let's quickly just talk about the bull case for Bitcoin. What does it look like, and what are the main points why you should be buying Bitcoin here, okay? So the first one is a hedge against inflation, and some people will sell you that this is a alternative investment class from the traditional 11 market sectors. Okay, so what this gives you is diversification from traditional asset classes. And if you think about it, this is a security which has an extremely high beta, okay? And beta is a measure of the security's volatility against that of the market's volatility. So when the market actually crashed or fell 30-35% in the February-March timeframe, Bitcoin actually fell 50%, and then some of the other cryptocurrencies actually fell 65%. But at the bottom of that dip, it actually rose 50% after the market rose only 30%. Okay, so you're gonna see bigger swings up and down in relation to traditional asset classes. Okay, so the second point of why you should buy Bitcoin is that there is a finite supply. Okay, so what that means is there's only 21 million Bitcoin available to be mined, okay? And they're expected to be fully mined by 2140, okay? So that's over 100 years away. So we're very far from reaching peak Bitcoin supply. Now, when we have an inelastic supply, but we have potentially increasing demand in the future, what that does here is increases the price. So I'll show a graph up here of what that is, but basically inelastic supply means there is a certain amount, it doesn't move, and the demand is actually potentially increasing in the future, which should increase or should result in an increased price. Now, when you compare that to the fiat system or this fiat currency in general, central banks in theory have infinite money and can print as many dollars, as many yen as they want, as we're seeing with these stimulus packages right now. Look at just how their balance sheet looks over the near term here. Okay, the third point I would make for the bull case of Bitcoin is that you're potentially in the early adopter stage, and what that means is you'll be one of the very first few people to actually start using Bitcoin as a means of exchange, as a unit of account, or as a store of value. Basically what I'm trying to say is there is lots of potential if this becomes the main repository or medium of exchange in the future, because that means increased demand. Okay, fourth argument would be that there is enhanced privacy and less surveillance, and I think, you kind of see that with what happened with the Silk Road. I'll talk a little bit more about the Silk Road in the bear case, but the book I just read, The Blockchain Revolution, talked about these
Distributed autonomous agents, meaning
to verify transactions. It'll basically be done randomly by Bitcoin miners all over the world. Okay, so for the people that are currently mining Bitcoin, they will continue to have value in the future as they'll be able to charge transaction fees for verifying transactions. So there's actually a whole chapter in the book dedicated or called Rebuilding Government and Democracy. What it kind of talks about is basically rethinking the way we think about verification, about the use and how money should be policed. And if you believe in decentralization of currency, you should certainly be long Bitcoin. Fifth argument is that there is an extremely high risk, high reward ratio. Meaning, if you're in your 20s, you have a 40, 30-year investment horizon, okay? Bitcoin's trading at $5,000. You'll be able to recoup the losses of $5,000 if you lose 90% of it. The opportunity that Bitcoin potentially is giving is
100 times your money.
Okay, so is it worth it to lose $5,000 with the potential of 100 timesing that? I would say probably yes. And in fact, I have a clip here for you as well from Andrei Jikh's channel, if any of you guys are familiar with that channel, where he actually interviewed a former hedge fund manager. So go ahead and roll that clip now.
What alternative do we have then besides the stock market? That's all we've ever been told is real estate, bonds, stock market mainly. Where else do we go?
Crypto.
Crypto, that was kind of going towards that direction.
Well, listen, I may be wrong, but let's say you're a 26-year-old, right? And you think, you've got $5,000 of savings and you think, well, what's the point of buying stock market all-time highs? I don't know what I'm doing. I'm going to lose money. But Bitcoin, for example, is a potential asset. And if anybody ever wants to know more about it, read Safedine Amos's book, The Bitcoin Standard, which gives you a really great understanding about why Bitcoin is a really great asset for savings. Now, the good thing about Bitcoin is its expected future return is very high. Could it go to zero? Probably not anymore. Could it fall 50, 60% from here? Of course. But its expected return is maybe 100 times from here. So you actually have an opportunity as a young person that even if it goes wrong and it doesn't work out, and you wipe out half of your $5,000, you've got plenty of time to make it back.
Okay, so you can basically see he kind of reiterates there's an extremely high risk-reward ratio here, which is what my fifth point is. So that's pretty much the bull case for me. Give me a second, and now we're going to talk about the negatives regarding Bitcoin. Okay guys, so now that we've talked about the bull case, let's jump into the bear case and the things that I think are actually negative about Bitcoin, okay? So my first point is that deregulation will never prevail. And what I mean by this is when you talk about deregulation or decentralization, there's a reason central banks were created in the first place. It was, again, to be a lender of last resort as well as provide liquidity to commercial banks and provide price stability in one's fiat currency. A world without government regulation is desolate, okay? Removing all these controls that we currently have in place will end up in actually negative things for our economy. It'll end up in negative things for our world in general. And that would be my first point, that you want to take away the government or the police or the banks from the equation of money, and we have absolute chaos. Okay, so my second point is that cryptocurrencies don't actually add functionality. Blockchain is a technology. Cryptocurrency is it is a medium of exchange. It is a unit of account, and it is a store of value. But there's plenty of other things which already do that, okay? You have, again, the currency safe havens, such as the US dollar, the Chinese yen. You also have, stocks, bonds, and, just other fiat currencies that already provide mediums of exchange, that already provide units of account and stores of value. Why do you need another one without government authority? That's really what cryptocurrencies are. It is those three functionalities.
Without government.
It's decentralized currency. That's what it is. So I guess just wrapping up at number 2, my point is this already exists. It's nothing new. There's just no central authority behind it besides the people. Okay, my third point is that blockchain technology can actually be copied and leveraged. In fact, banks or MasterCard and Visa already provide means of using cryptocurrencies as an asset or payment, and they talk about how the
Usage amongst it's actually extremely low.
So the fact that there's already massive companies in the world using cryptocurrency as a medium of exchange, but it hasn't blown up yet, kind of points to the idea that really this is nothing new. It's just a decentralized currency. There's also a chapter in the book I just read, Blockchain Revolution, that talks about reinventing financial services. Well, quite frankly, they are adapting as we speak. Many of them do offer the ability to purchase cryptocurrencies or to pay via cryptocurrencies. This is nothing new. Again, it's something that's been around a long time, and potentially there's been a slight increase in usage for it, but ultimately, decentralized currency versus centralized currency, I think fiat currency wins in this case. Okay, so my fourth point is that it encourages criminal behavior. Now, this one's kind of interesting. There was a website that appeared on the dark web known as Silk Road. Some of you may have heard of it. I'll put some articles up on the screen right now as I speak about it. Basically, it was a website for purchasing illegal things, whether that be weapons, whether that be drugs, whether that be prostitution. This was a site where you could get all of those things. And I'm not saying that Silk Roads won't exist in the future. It's just that it only accepted payment via cryptocurrency because there was no authoritative figure policing it. Granted, they did catch the guy in 2013 and Silk Road was shut down, but obviously these operations just moved to different parts of the dark web. I think enabling cryptocurrency enables or encourages criminal behavior in that regard. In fact, when you bought things off Silk Road, I read that it would actually give you a disclaimer of how not to be caught by authorities. So I think, again, this just enables criminal activity, and I think we will move away from it in the future, and that really it's just nothing special. Okay, fifth point and last one of the video is that you already missed out on price appreciation. So if you look at the price of Bitcoin, you can see it jumped to almost like 20,000 in the early 2010s, and it jumped back up to, I think, 12 or 13,000 in the past couple of years. And there was kind of massive bubbles both those times. You saw it come crashing right back down. My point is that you might have already missed out on price appreciation if you believe in the semi-strong form efficiency market hypothesis, meaning that all public information is actually priced in. So that if people know that this may become the currency of the future, is that already priced in? We might have already seen those bubbles collapse back in the early 2010s. So you might have already missed out on most of the price appreciation. If you're some day trader, you're, swing trading on, small percentage points, that's fine. You can certainly make money from this. But if you're just a buy and hold long-term type of investor, you might have actually already missed out on most of the price appreciation of this asset. Okay, so those are kind of the two cases for me. That's kind of what I came up with after reading this book, The Blockchain Revolution, and I was hoping that it would kind of change my mind about cryptocurrencies. I've always kind of had a very traditionalist view on it, that it isn't the future. In fact, it's just another medium of exchange. So in conclusion, I guess what I would say is I'm probably kind of on the fence like Elon Musk. I don't want to anger anybody with this video, but if you look at the positives and you look at the negatives, and I'm sure if you guys have more, certainly let me know down in the comments. But I just think a world without regulation, a world without centralization or help from public authorities looks very bad. And I think we got a taste of that with the Silk Road. Granted, they caught the guy, and they will certainly still be policing, cryptocurrencies as we move on here, as they potentially become a more heavily used medium of exchange. I just think that it's nothing new. It doesn't provide anything new in terms of the functionality of money. You have, again, the units of account, a store of value, and a medium of exchange. Cryptocurrency does that, but if you look at all the other currencies worldwide, they also do that. So what makes this so special or unique? All that makes it unique is that it's decentralized. Okay, so those are my opinions on cryptocurrencies. If you stayed till the end, I hope you enjoyed. Smash the like button if you got some value out of this. Share the video with a friend if you got a ton of value out of this. And I hope to see you guys in the next video. Peace out.